This is the Hey Ed YouTube channel, and I am your host, moderator, and all around nice guy, Edward Anderson. And this is episode 7 of my series called Trading Tricks, where I teach you some tricks of the trade regarding trading the markets. So, this is episode 7. I'm going to be talking to you today about the theory of relativity. And no, it's not the famous Albert Einstein theory. I'm afraid I hijacked the phrase a little bit. Over the years of being a trading instructor, I would try to find ways of taking a complicated idea and simplifying it so people can understand it. And one of the little phrases, one of the edisms that came out of my course was the theory of relativity. Now, this is a really cool little trading trick that will be very valuable to you. And this one little theory all by itself could make you a lot of money if you understand it. Okay, the theory states that whenever a stock or whatever it is you're trading does something other than what it should be doing, it makes that move even more significant than it would otherwise be. Okay, now this requires a little bit of clarification. Okay, all right. What I mean by that is, let's say that something happened that I'm going to use a stock, for example. This applies to everything, right? Let's say that a company comes out with some really good news after the market closed, right? And they come out with a really good earnings report. They blow away the street estimates, or they've got FDA approval on a new drug, or they won a lawsuit. Whatever the news is, it's a piece of news that should be making that stock run up sharply. But what happens? It doesn't run up sharply. Maybe it runs up a little bit, or maybe it just does nothing, or maybe it even goes down. Okay, that's not a good sign in that case, right? When you, in that situation, that little product, whatever it is, should be screaming to the upside. Instead, it's not. Now, several things could account for this. One is that stock or that product might have been running up in anticipation of the news, the old buy the rumor, sell the news phenomenon, right? That could have been it. Or maybe there's a little asterisk in that news release way down the list. It doesn't matter. Remember, the news never matters. Okay, I don't care what the news is, it never matters. What matters is the reaction to the news. That's the only thing that matters. So don't get caught up in what the actual news is. You want to look at what the reaction to the news is. That's all. And now this works in both directions. Let's say that same company, crypto, forex, whatever it is, has what you would think would be bad news. Maybe they missed their earnings by a big number, or whatever the news happens to be. It's bad news. So that product should be going down dramatically, but instead it doesn't. Maybe it just goes down a little bit, or maybe it's holding even, or maybe it's actually rallying. Well, again, people might have been selling that product ahead of the news, and everyone who wanted to sell it has already done it. I mean, the real effect of this theory is telling you what the interest of the street is collectively for that product, and it will tell you if a stock is not rallying when it should be, then everyone who wants to own it already owns it. And conversely, if the company has bad news and it rallies, okay, that tells you everyone who wanted to sell that product has already done it and it's washed out. So from a trading perspective, you can use this as a contrary indicator, okay? And remember, we're traders, right? So we think like traders, not investors. We take advantage over what investors don't know, all right? And this is one of the inside tricks that traders rely on when making their trading decisions. So become good at that theory of relativity. Become good at looking at situations just a little bit differently than everyone else does. And that is a really important clue, that theory of relativity. And that will help you make judgment calls about the risk in that trade. Because if it's already washed out and it's already down sharply and it's starting to go up, well, then the risk is already been bled out of the situation, right? Everyone who wanted to sell it already has already sold. That would indicate that it's probably a really good bargain, a really good price, right? Conversely, if the stock has topped out, and good news is not moving it anymore to the upside, you might want to be looking to short that guy. shorting. This is the first time I mentioned shorting in these trading tricks. But shorting, just so you, in case you don't know, is a way of making money on things when they go down. As traders, we can make money in both directions. Okay, we can make money on things when they go up and when things go down. That's one of the advantages we have as traders, by the way. Investors make money in one direction. Okay, they have to buy something and hope that it goes up in value. As a trader, we can make money in both directions. So right away, we have a 100% a better chance than an investor does just because of that. We have more options available to us. Okay, so the theory of relativity. Please take this one to heart. If you need to, watch this video again and watch it as many times as you need to get that concept in your head. And of course, you will watch all the price action in the charts. All right, so that's why you got to learn how to read charts. It takes us back to technical analysis, right? When you're trading, you're going to be relying very heavily on the charts. All right, so that's it for now. Make sure you give this video a like. And if you want to watch my other trading tricks videos, make sure you subscribe and click on the playlist for the trading tricks, and you can binge watch all of my little trading tricks videos. But please make sure you give this video a like and give me a comment. So I'll see you in the next video. Edward Anderson signing out.
Copy that.